It is official, guys. The 3 out of the 4 largest bank failures in the US history have happened in the last 2 months. First Republic Bank, ticker symbol FRC, has officially been taken over by JP Morgan. It has officially failed. And if you guys look at this chart right here, you guys will see that it is the second biggest bank assets that had assets to fail, right? Washington Mutual failed with $307 billion worth of assets. First Republic Bank, which failed just over this weekend officially, it was kind of coming, so it was expected, but they failed with 229.1 billion. And then the famous Silicon Valley Bank and Signature Bank that happened earlier this year. Silicon Valley Bank had 209 billion in assets, and Signature Bank had 118 billion, right? So not too much to be said here, honestly, guys. It was kind of expected. It would have taken a miracle for the company to survive. Last week's video, we made a video about will it survive and what technical elements have to take place for it to actually survive, right? And obviously, outside of the technicals, you have fundamentals, which was the earnings that came in. They didn't come in as a surprise. Obviously, deposits were lower. Depositors are fleeing from the bank. So, it was expected to hear that. But everybody did really, give the company or the bank the benefit of the doubt that, maybe they'll somehow work out some sort of way of making it work. And we'll jump into what we talked about last week and kind of where we're at since then. But yeah, obviously that didn't happen. As you guys can see, just a month ago, we were basically trading at 123. About 2 months ago, we were at 147, and today we're at 299. And that's after hours. So last week we were pretty much right here. Let me go ahead and grab a drawing tool. We're looking at a daily chart. And last week on Monday, we literally touched this EMA. And if you guys watched last week's video, what we were talking about is on the daily chart, what we wanted to see was we wanted to see this happen, obviously. But since then, we wanted it to either continue higher or come back, retest this EMA, and then continue higher. And that would have been the scenario if they did work something out to where they were able to survive. But clearly, they didn't make that happen. And so we pretty much continued to see selling pressure. We got rejected right at this pivotal point. We didn't break above it. We didn't hold above it. So what we talked about last week was if we break above it and we hold above it, it would be a good place to start scaling in, because that's about as close to the bottom as you would get to jumping in on it if it was to recover. But we also said on the flip side that if we don't hold above it and we break below or we continue lower, we're just going to ignore it. And that's essentially what we ended up doing is we didn't jump into the stock just because we didn't see a confirmation, right? Breaking above and bouncing on the EMA and continuing higher or just continuing higher would be the confirmation for us, which we didn't see. And we clearly saw a continuation of a sell-off. And so in essence, that's kind of why it's important to pay attention to these technicals, to these levels, is because it really gives you an idea of what needs to happen for you to be able to justify going into a position. And because we didn't see that happen, we weren't justified to go into that position. And I'm sure a lot of people got caught in this little trap thinking that we were about to recover. And now they're, obviously down on their position because they jumped in too early, right? They jumped in without being confirmed that the stock is actually recovering. At this point, this stock is not going to recover. So if you guys are late to the party and don't really know what's been going on, definitely not a ticker I would suggest you jumping into just because it's at a very steep discount. It did fail. It is being taken over by JP Morgan, or it has been taken over by JP Morgan, and it is obviously going to be delisted off of the S&P 500. The company that actually will be replacing it on the S&P 500 will be Axon Enterprises. So if you guys, obviously when a stock jump gets put into the S&P 500, it gets more exposure. So one to pay attention to. Maybe we'll cover it. Let me know in the comments if you guys want me to cover that stock and potentially what to expect if once it does get put into the S&P 500. I'm not saying there's going to be a crazy move, but like I said, it does get a bit more exposure than it used to because now it is in that index, right? Or it's in that index, right? The S&P 500. So you guys let me know in the comments if you guys want me to cover that stock, or if there's any other stocks that you want me to cover, or any other news that's coming out that you guys want me to go over. This was one that a lot of people talked about, and a lot of people requested that I, talk about it and give my opinion about it. And so that was my opinion. It was the EMA line. We need to see a break. And a continuation or a confirmation. We didn't see that, so we stayed out of it, and that's obviously the better choice to make in a situation like this. So that's pretty much all there is to say about FRC. If you guys want to really see what we talked about a little more in depth, watch last week's video. I'm going to drop it somewhere on this screen right here so you guys can reference back to it. But other than that, that's pretty much it. Otherwise, what we're going to do is we're going to jump into QQQ, which is the NASDAQ, and we're going to talk about the overall market because ever since really we started seeing a lot of selling pressure happening in the overall market, we've been trading two tickers, which is TQQQ and SQQQ, which are inverse ETFs of QQQ, which is the NASDAQ. And so when we're trading the NASDAQ, for us to really know whether we're taking TQQQ positions or SQQQ positions, we need to know the overall direction of the overall market. And so this is kind of where we're at right here. Again, we're going to be doing an analysis from the daily chart. And it seems like we are going into, a reversal, but there are a couple things that I do want you guys to know. Obviously, a bank failure is not a good sign. May 3rd, we should be hearing from the FOMC. So we should be hearing from the Fed as far as rates going up. And it's actually expected that we will see more interest rate hikes, which is not going to be good for the overall market. And that's just from a fundamental standpoint, some basic points. A couple other things I want you guys to note from a technical stance is let's go ahead and grab a drawing tool. We're going to look at the RSI, and we're looking at the daily chart. So what we see here is we see a higher level on the RSI. And when we were here on the 31st, let me go ahead and grab a drawing tool. That way I can connect all of this for you guys. So at this point, what we saw the RSI pretty much peaking at 70. And the one thing that I want you guys to know is we actually went up slightly in price. We are above this level that we were at here on price, but we are much lower on the RSI. And what that's called is called a bearish divergence. And that usually indicates that momentum to the upside, or, in a bullish divergence, it would be the opposite. But in this scenario, the momentum to the upside is slowing down. Buyers are slowing down. We obviously had a bank failure. Interest rates are going to be going high. And we have recovered quite a bit since the lows that we put in at 254 back last year. So, is this that moment where we start seeing selling pressure kicking in? Only time will tell, really, but we'll go over both scenarios so that you guys know what to expect. And if we do continue higher, we're going to be trading TQQQ. If we start seeing selling pressure, we're going to jump into SQQQ. And what we're going to be looking at is what we're going to discuss real quick right here. Not too much of an update. We were pretty much stagnant all day today. And if we jump into a 15-minute chart, you guys will see that, we didn't really go anywhere today. We opened up around 322 is where we opened, and we pretty much closed at 322.34. So pretty much at the same place. We opened and closed at the same place. We were stagnant. Going back to the daily chart though, because you guys can see a bigger picture here. As you guys can see, we were in this window of pretty much consolidation for a very, very long time. As you guys can see, this little shaded area is that box of window that we were in, that we were consolidating for the last 2 weeks. Right? So we were attempting to break above it, but now that we're seeing this bearish divergence, I'm not so convinced that we are completely done being, consolidating. And I think that we might see actually a sell-off back to this 313 zone and potentially a continuation with this consolidation, or if we break above this 321 zone, 321, 322 zone, and we get confirmation, that next level up is going to be, let's go ahead and jump into it. That next level is going to be 336.90, 337 pretty much. And we haven't been at that zone since pretty much August of last year was the last time that we were all the way up here. So it's going to be quite a zone to reach. And that's going to be that next level of resistance if we do continue to push up. So in the case that, let's go ahead and grab that drawing tool again. In the case that we do see, confirmation of a hold here and a continuation to the upside, this is going to be that first level of resistance, 334. And again, that's just because of previous levels, right? And it's also aligning with the fact that we're going to be very overbought here on the RSI, which again is an indication that we're going to see exhaustion in momentum. The one thing we are looking at here is the RS or the MACD, and it does indicate that we potentially have some still have some room to continue higher. But in this case, with how confusing, I wouldn't say confusing, but unclear, all these indicators and kind of the overall situation of the overall market is, I wouldn't expect, highs to be put in. I'm not saying that we can't, but it's difficult to say at this time. So again, what we want to see is we want to see a hold above this 321 zone. And if we hold above that 321 zone, we're going to head to 334. And that's going to be that level that we're going to be at, we're going to find resistance next. On the contrary, if let's clear this up. That's one scenario that we might see, and that's the scenario that we would be going into TQQQ. The other scenario is we break below, we head back down to this 313 zone, and we continue to consolidate as we have been consolidating for the last 2 weeks, right? So we haven't seen much change. And so in this kind of a scenario, you'd want to be trading something on a 15-minute or a 5-minute time frame, and you can just basically scalp these moves intraday, right? And again, the same strategy applies, right? You want to use the EMA. If you guys are in the academy, you guys know what I'm talking about. If you guys are interested in joining, leave me a comment in the comments below, or just check out some of the links and you guys will find a way to access the academy where I teach all these strategies. But what we basically trade is this blue line EMA on the 15. And so intraday, you can basically get in on the moves up and the moves down, as we've been saying pretty much for the last 2 weeks. It is not the easiest thing to trade, but it's definitely, a strategy that does work. And it's a way to capitalize intraday, right? For the bigger moves, same thing applies, but on a bigger scale. But as you guys can see, if we're consolidating, you can't really do that on a bigger scale when the direction isn't clear, fundamentals aren't clear, and technicals aren't clear. So the easiest way to do that and to capitalize and to trade is on a smaller time frame, 15 or 5-minute, using the EMA strategy. So that's the second scenario. In that case, you just trade intraday or you just sit on cash. Either or would be a good decision to make. Sitting on cash, waiting for a clear direction, never hurt nobody. Nobody ever lost money doing that or made money on the other side. But at least your money's safe and you're not stressing yourself out trying to figure out what's happening with the market. Or you can intraday trade using the 15 or 5-minute using the EMA strategy. So that's the second option that we're going to see. The third option is we break lower, we don't hold that 313 zone, and we continue lower. And that next level down, what we're going to see is going to be this 290 zone. And at this 290 zone, again, it's a previous resistance level, or it used to be a resistance level. Then it became a support level on the way down right here. When we broke above it, came down, became support again when we tried to break down again, pushed up, and now if we come down, that's going to be the same level of support once again. So we're going to be testing this zone. And that is if we break out to the downside out of that consolidation zone. And so for that scenario, we're going to be jumping into SQQQ and capitalizing on the market going down. So those are the 3 scenarios that we may see. Again, it really comes down to charting out these levels, making sure you're paying attention to them. And so at that point, that consolidation zone that we're in right now is between, I would say, 313 and 321. So if we're in that zone, either sit cash or trade intraday. As far as if we break above 322, giving us confirmation to the upside, what we're going to see is a trade in TQQQ, and our next target is going to be the 334, 336 zone. If we break below this consolidation zone, that level to the downside is going to be that 290, 289 zone. And that's where we're expecting to find some support. So that would be a great take profit zone. On the subject of, us potentially seeing some selling pressure, we do have plenty of room to run to the downside on the RSI before we become oversold. So a sell-off wouldn't be too far-fetched, right? I would probably be leaning more towards seeing a potential sell-off than potential continuation, just because of how overbought we are, because of the bearish divergence that we're seeing, and because we just don't have anything fundamentally to support us pushing higher, other than, us seeing earnings coming out this week, as well as, key economic data. So as far as earnings, if you guys want to see those, you guys can type in earnings whisperer, and it's going to show you all the earnings for the week. You guys can also follow me on Instagram, Facer Trading Academy, and I post the earnings, which earnings are going to be happening every Sunday night, so you guys can see for the week ahead. So that's pretty much it with the overall market. That's our game plan for the overall market. Hopefully that helped you guys. You guys let me know in the comments below what are you expecting? Do you think we're going to see more selling? Do you think we're going to continue to see consolidation? Or do you think we're actually going to continue to break out in light of, seeing yet another bank failure and rates being potentially raised here in May? So you guys let me know in the comments. I'm just curious to see what the sentiment is in our little community, and that would be interesting for everybody else to see. The next thing I wanted to talk about today was some of the key economic events going on this week, and that's going to be the last thing before we close out this call. So today we saw the manufacturing PMI, nothing crazy. The biggest one was the ISM manufacturing PMI. As you can see, we pretty much saw not too much action. Let me go ahead and go into that 15 that we guys can kind of see throughout the day how things reacted. We didn't really see too much of a reaction, nothing too significant. At 7 in the morning, we saw the ISM manufacturing PMI coming out, or ISM manufacturing prices being released. Everything pretty much happened before 8:30. And so after 8:30, we pretty much just saw a continuation, a little rally, and then we closed out pretty much at the same price that we opened. So not too much happened, but that was the biggest thing. ISM manufacturing PMI was the biggest thing that came out today. Tomorrow, what we have is the JOLTS job openings for the month of March. That's going to be a big one to pay attention to on Tuesday. Wednesday, we have ADP non-farm employment. We have services PMI. That's going to be a big one. ISM non-manufacturing PMI, crude oil inventories. And then we have the FOMC statement coming out. The Fed interest rate decision is being released as well. What's expected is 5.25% is what's expected. 5% was what we saw previously. So we'll see what the decision is on Wednesday. That's going to be a huge one. That's going to impact the market. Definitely. So Wednesday is a really big day for you guys to pay attention to. Make sure you guys are aware of what's happening. Thursday, initial jobless claims and continuing jobless claims are going to be released on Thursday. We also have some of the less significant but still interesting to pay attention to, and it will influence the market. Trade balance for the month of March, and unit labor costs quarter over quarter. Friday, what we have is the non-farm payroll. That's going to be a big one to pay attention to, and that should be an unemployment rate. That's going to be a huge one to pay attention to as well. That's a big data point that's coming out there. So those are the key economic data points that are going to be released throughout this week. So if you guys aren't paying attention to those, make sure to pay attention to those. Hopefully this video was informative and helpful for you guys, so you guys have a better idea as to, obviously, to avoid FRC, which is First Republic Bank. It has collapsed. And then as far as the overall market and, trading SQQQ or TQQQ and QQQ in general, you guys kind of see where we're at. We're at the top of that consolidation channel. Not too late to get rejected and go back into it. So, don't get too extremely excited. We do need to see a couple more days, or at least at least another day of being holding above it without seeing selling pressure, because that's pretty much what we saw today. We saw selling pressure, a lot of it. And so on a 4-hour chart, you guys can obviously see we actually saw a reversal pattern panning out in addition to that bearish divergence that we saw. So on top of that, this pattern right here is actually a reversal pattern. So again, giving us a confirmation on the 4-hour. On the 4-hour, again, we're seeing MACD showing signs of more downside. RSI not looking too hot either. So I would expect more selling pressure, especially with the Fed rate decision coming up. And that's pretty much all I got for you guys today. Hopefully you guys enjoyed this video and gained some value from it. If you guys have, make sure to smash that like button, subscribe if you're not subscribed, and I'll see you guys on next week's Stock Talk video.